All right, let's get right into it. Today we are talking about the great crypto crash. The market has just been absolutely hammered, losing trillions of dollars. But the real question isn't just what happened, it's whether this time the crash is actually for good. So let's find out. Just to wrap your head around the sheer scale of this, you have to look at the number. From its peak, the crypto market has seen a mind-blowing $2.2 trillion just wiped out. But look, that number alone doesn't really capture the crisis because it all happened at the exact moment crypto's biggest promises were finally being put to the ultimate test. And, oh boy, what a test it's been. On every single one of its core promises, crypto completely stumbled. As a currency, it's been practically hyperinflationary. A payment system, still way too slow and way too expensive. A store of value? Okay, get this. A year ago, one Bitcoin could buy you 32 ounces of gold. Today, it's less than 12. And an anti-establishment tool, it's now totally dominated by the very same Wall Street firms it was supposed to replace. So all of this failure, it really forces us to ask a super uncomfortable question. It's one that, let's be honest, a lot of people have been whispering for years. After all the hype, all the money, was this whole thing just a really dumb idea from the get-go? We're going to investigate. Now, I know exactly what some of you are thinking. Hang on, crypto has crashed before. We've heard this story a dozen times. It always comes back stronger. And you know what? You're not wrong. The industry has a long, long history of these dramatic boom and bust cycles. Just look at this timeline. You had the Mt. Gox hack back in 2011, Bitcoin crashed over 93%. Then there was the China ban, the ICO bubble popping in 2017, and of course the insane collapse of Terra/Luna in 2022. Every single time, the market took a massive nosedive, and every single time it eventually roared back to a new all-time high, proving all the doubters wrong. But, and this is the crucial point, this time something just feels different. And it's not just the critics saying it anymore. Even people deep inside the industry are raising the alarm, warning that the old patterns might not apply because the fundamental ground beneath crypto has completely shifted. Okay, so let's get to the core of it. We're going to break down the four key reasons, four major headwinds that suggest this crypto crisis is unlike anything we have ever seen before. So these four factors are, first, a lack of a single clear cause for the crash. Second, the original speculators have moved on. Third, this weird paradox of mainstream adoption. And finally, the rise of a powerful new competitor for resources and, well, for attention. Let's start with reason one. In the past, right, you could always point to a single event that caused a crash, a hack, a ban, some project imploding. You could say, okay, once we fix that or just move past it, we can recover. But today, there's no single catalyst. It's a perfect storm of persistent issues, which means there's no obvious path to recovery. There's no one dragon to slay this time. Second, and this one is huge, the core user base has started to move on. Let's just be real for a second. The number one reason most people bought crypto wasn't for the tech, it was to sell it later for more money. It was a gamble. Well, now those gamblers have found other, frankly, more direct places to play. And just look at the change in mindset here. The old guard, they were driven by this kind of optimistic, we're all gonna make it belief. They built the whole culture. But the new speculator, they're driven by something way different, financial nihilism. It's this feeling that the whole system is rigged anyway, so any big risk is worth taking for a slim chance to catch up. For them, sports betting and prediction markets just offer a much more direct thrill. That core group that fueled crypto's rise, they're simply moving on. Now, the third reason is just deeply ironic. For years, crypto's true believers said, just wait until we're legitimate, just wait until the big banks and the regulators get on board. Well, they got their wish. And it has been an absolute disaster for crypto's entire story. This quote really just says it all. The whole narrative was built on being this anti-establishment rebellion. But now that you can buy a Bitcoin ETF managed by BlackRock, that story is completely dead. All the big milestones that were supposed to legitimize crypto and send it to the moon, well, they've already happened. The SEC softened its stance, the big banks are involved, but the fundamental use case hasn't changed one bit. And that's the problem. There are no more big promises left to sell. And finally, the fourth reason, a brand new challenger has entered the ring. While crypto's story has totally faded, a new, much more compelling speculative mania has captured the world's attention, its capital, and its resources, artificial intelligence. And listen, this isn't just a battle for hype, it's a real-world battle for physical resources. As this chart shows, the energy demand from AI data centers now rivals that of Bitcoin mining. We're talking around 150 terawatt hours per year each. To put that in perspective, they both consume more power than the entire country of Sweden. They are in a direct head-to-head competition for the same energy. So here's exactly how that competition directly hurts crypto. As AI gobbles up more energy and more specialized hardware, it drives up the cost to mine coins and process transactions. This leads directly to slower networks and higher fees, which basically demolishes the already weak argument that crypto could ever function as a real payment system. Okay, so at this point you might be thinking, this is all interesting, but I never invested a single penny in crypto, so why should I care? Well, it turns out this entire industry has cost you money, whether you participated in it or not. You see, the crypto industry creates these huge hidden costs that get passed on to all of us. The immense energy consumption can drive up electricity bills for everyone. It uses vast amounts of water for cooling data centers, creates literal mountains of e-waste, and it pulls incredibly talented people and investment capital away from what could be more productive parts of the economy. And to put a real number on it, just think about this. Bitcoin mining alone generates an estimated 30,000 tons of electronic waste every single year. That's as specialized mining rigs become obsolete and are just thrown away. That is a truly staggering environmental cost. So when you put all this together, what you see is a technology that's just lost its way. It was pitched as this revolutionary solution, but after more than a decade, it really still seems to be a solution desperately searching for a problem to solve. Because at its core, the crypto market is a zero-sum game. See, unlike a company that actually produces goods or services, a cryptocurrency doesn't generate new value. The only way for an investor to make money and cash out is for a new investor to come in and buy their coins, hoping to eventually sell them to someone else for an even higher price. And that really brings us to the final verdict here. The story of an anti-establishment rebellion? It's over. The promise of getting rich quick? That's faded for pretty much everyone. And most importantly, no compelling new narrative has emerged to take their place. The industry has lost its why. Which leaves us all with one final haunting question. If an asset's main value came not from its utility, but from the power of its story, what is that asset truly worth when nobody believes in the story anymore? Thanks for watching.